1 year and 8 months ago, I decided to invest $5 every single day into the stock market. The goal here is to inspire investing even if you don't have a lot of money to invest. Here is your monthly update on my portfolio for August of 2023. Even though I started this back in January 2022, I wish I would have started it like 5 years ago or 10 years ago, because just that small amount, just that $5 every day, can actually grow into a lot of money, which surprised me, and I'll share that a little bit later in the video. Now, I have some vital warnings to share with you based on the comments that I've been getting in my past videos. There's some things that you need to know if you're already doing this challenge or you're about to do the challenge. But before we get to that, let me give you the update on the portfolio for August 2023. So I first started with my $5 invested into the S&P 500 fund known as VOO. Now, look at the price of this thing. $410.63 as of the recording of this video. And back in the day, you used to have to, in order to invest, you would have to buy a full share, which means you would have to save up $410 to buy one share of this fund. But we don't have that. We're trying to only invest with our $5 a day. So the beauty of it today is that a lot of the brokerages, a lot of the investing apps, they allow you now to buy fractional shares, which means you don't have to save up $400 to buy. You can put in $5 a day and build yourself up. So if I scroll to the bottom of my app, by the way, I am using Robinhood right now for my daily automatic investing. And I scroll down here and you can see here's the latest update. Total shares of 7.9. So we've grown quite a bit from January 2022 to 7.9 shares with a market value of $3,256. Look at the average cost here, $378.13, which means that whenever the number up here at the top, the going price for VOO in my case, is above my average cost down here of $378, that means I'm actually making money by investing. And you can see that right down here. The total return is $259.05, representing a total percentage return of 8.64%. And that's what you need to focus on, is the percentage. Right now, I'm dealing with small numbers. We're only doing, what was it, $3,257? That's not a lot of money. But once we scale up over 10 years and 20 years from now, then we're going to see this really grow and compound. And I'll share that with you in just a moment. Now, not all brokerage apps do this, but you can see I have a recurring investment. That means that I don't have to come in here every day and physically hit trade and buy $5. It actually automatically will just do this every day. Now, you might wonder, why does it say $7? If you're new here, $7 is because the market is only open Monday through Friday, and they're closed on all weekend days as well as all United States major holidays. So if I truly want to do $5 every day in a year, there's 365 days a year. So that's basically me making up for that. By $7, it kind of covers that Saturday and Sunday, and it spreads that money out. So theoretically, it's $5 a day. Now, because you're investing every single day, or even if you can't, you just invest every month, the benefit is you're doing something called dollar cost averaging. And I want to share something a little bit new this time around off of my investment statement that I got for the past month. So we're kind of reflecting back on July through that whole month, how things progressed. So right here on July 7th, for example, I purchased my $5 daily investment, and that went for a total of $406.64. Now, if you look here today, it's $410. So back in July, it was a little bit less than $410 a share. On 7/11, my $5 went into VOO, and it was only going for $404. So because you're dollar cost averaging every single day, you're taking advantage of the highs and the lows. So that's what it looks like for VOO. Let's take a look at Ethereum. Now, some of you may not like cryptocurrency, and that's perfectly fine. I'll get back to stocks in just a hot second with some updates that you need to know about. But I did also say, hey, let me diversify into a whole different asset, and that's crypto. So I decided to go with Ethereum, because that's what I chose. $5 every single day into Ethereum as well. Now, I know that's $10 a day, but the goal here is, over time, as investors, we want to continue to scale up our income so we can invest more money, which will make us more money in the future. Now, as you can see here, there's actually quite a drop that just happened there on the chart. You know, we're going here for about $18.53, now going for $18.40. So it is down a little bit by $3.59.61. Whatever, I don't care. Let's take a look at the actual numbers. Now, of course, for one whole Ethereum, that's a ton of money. $1,840 is way too much money. But what's cool about it is that $5 a day since January 2022 has got me up to 1.6 Ethereum. That's a value of $3,050, give or take. Now, the average cost here is $17.14 because I did start this back in January 2022 when the market was down. And remember, 2022 was a bad year for crypto. It was a bad year for stocks. It was going down. And as a result of that, of course, you're going to take advantage of the ride down. And that's a little bit something that you need to keep in mind. When the market does go down, things don't look as pretty as they do today. And you got to be okay with that because we're in it for the long term. 10 years from now, 20 years from now. I might hold on to this probably for 20 years at this point. But let's say in the next 10 years, I'm going to come back here with a video and we're going to see, did I make a lot of money or did I lose a lot of money? We'll find out. Look at the total return, $211.42. That's a percentage gain of 7.46%. It's actually lower than the stock market. See, there's times that crypto is actually doing worse. There's times that crypto is doing better. Now, let me talk about those critical warnings that I talked about a little bit earlier in the video. There's actually two major ones as I look ahead to this next month of the $5 a day challenge. And it's based a lot on your comments in the last video in July. And the first one is tax-advantaged growth. Now, a lot of people said, hey, wait a minute, what about a Roth IRA or a 401k? This $5 a day challenge is really meant to get people used to investing and get people used to investing in index funds, like VOO, for example. Taking out something out of your daily budget of $5 a day, let's say you go to Starbucks every day and you're tired of that and you don't want to spend that money anymore. Well, invest it instead. So you could do something like that, and that's kind of the easy way. But that doesn't overrule the opportunities of retirement accounts. There's a couple of them. First of all, if your job offers any type of retirement plan where they match your money, you should invest your money there first. If you have the opportunity to open up a Roth IRA, Roth IRAs grow tax-free, which means that as your money grows over time, you can start withdrawing all of those gains after a certain period of time, absolutely tax-free. You don't owe taxes at the end of the year on that particular account. So make sure you set yourself up with those first, but that's where you should be throwing a bulk of your income, a bulk of your money. The $5 a day challenge is to have a little bit of fun on the side, also learn a little bit more about investing, and also build up a fun little account that could actually serve you very well in the future. And that leads us to the second warning, and that is compound interest. A lot of great comments on the last video, but a lot of concerning comments on the last video as well. And we need to talk through that. I'll link this down below so you can check it out for yourself as well. But this is nerdwallet.com. And what we need to do is talk about the power of compound interest when it comes down to the long term. So again, if I take $5 a day, multiply by 365 days a year, that means we'll be putting in $1,825 a year. Let me divide that by 12 months within the year, and that gives us $152 a month. So let's say our initial deposit is $152, and we're going to continue to contribute $152 a month thereafter. Now, this doesn't have a daily option, which is why I had to convert our $5 a day into $152 a month. But let's talk about the magic here. This is where it gets exciting. So if we look at the next 20 years with an estimated rate of return of 10.5%, now wait a minute, 10.5%, a lot of you are going to be like, what? Where did you get that number from? That number actually comes from the last 100 years average performance of the S&P 500 stock market index. I will link my sources down below for the receipts on where I'm getting these numbers from. So the reason I wanted to look at that average percentage over the last 100 years is I wanted to make up for understanding the Great Depression of 1929, the Great Recession of 2008, even 9/11, and even coronavirus. I wanted to put all that together, and that number averages out to 10.5%. So what we would look at from this compound interest perspective is what happens to the green line here on this particular graph. That's where this magic really comes into it. Look at our balance after 20 years, $124,000. That is remarkable. Now imagine this. We do $5 a day for the next 20 years, okay? Then what do we do with that? We can do whatever we want with that money. I mean, we could have that extra money in our retirement. I might use it for some future cruises. Yes, but here's what's really cool about it. I'm going to zoom over here on the side, okay? And look at this. Now, this balance right here in the year 2041 is a total of $110,000, which means your $5 a day of your hard-earned money, you put in $34,808. But look at the interest, $75,543. So there's a point in time where your compound interest, which means your investment returns, grows at a higher rate than the money that you even put into it in the first place. Let's take a look at where that actually happened. So here we are, we're actually down below. See how the interest is lower than the total principal? We're gonna go up until it's more. Right about, so in the year 2035, okay, 2035, we're gonna have a total interest that goes beyond the money that we put in. We're gonna gain more money of just overall return than we put in. But if we go back up here to where we were looking at, your total interest is $75,000. Let's take a look at what happens in that next year. Remember this number, $75,543. We pop up. Look at that, 87,795. So at an average return rate, 10.5%, that gives you an extra $10,000 of just additional growth. You got to leave the money in. If you sell it and return it and sell it, first of all, anytime you sell in a taxable brokerage account, you're going to have to pay taxes on all those earnings. I'd rather not do that until I have to. So I want that money to compound and get bigger and bigger and let that snowball grow, let alone the fact that we're going to get all these beautiful dividends, which is factored into that 10.5%, of course. See the magic behind this? This is the kind of stuff that gets me excited, guys, and I hope it gets you excited as well. And it also makes me mad that we didn't learn about this back in high school. Why didn't we learn about the fact that, hey, if you do this the right way, you could actually make a lot of money in the future? In that case, I would have actually paid all the commission fees back in the day when I was 18 years old, and I just would have started investing back then. But I didn't know what I was doing, and it took me until well into my 30s to figure this out, which is killing me because I'd be like a millionaire times like 5 by now, for real. Now, some of you may say, what about inflation? Well, that's where we can actually figure out this percentage right down here at 10.5%. We can lower that a little bit to account for your average 3 to 4% yearly inflation. So if we're looking at over the last 100 years of total inflation and we average that out into this number, we can put this down to about 7.3% return, and that would account for all the different inflation. So in that case, yes, for inflation, you'd be at $82,000, but the same deal goes here. Look at this. Even back here, so we have $40,000 of interest on top of what you contributed, 34. It's higher. And then in the next year, you'll be at 46, gaining an additional $6,000 of just compound interest growth. That, my friend, is the magic. Now, there's more to learn about this whole compound interest thing and why it's so vitally important. So make sure you check out that video next. But if you want to learn all about the $5 a day challenge, check out the playlist up here. We'll see you on the next video.